Hello, and welcome to the Fintech Times Podcast, focused on discussing the latest fintech topics and trends from around the world. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report all the latest and brightest ideas from the fintech world.
Hi, my name is Bignell. I'm a journalist at the Fintech Times, and I would like to welcome you back to the Fintech Times podcast. Today we've got two great guests to discuss InsurTech. InsurTech is a key growth industry that has matched its pace with fintech, taking advantage of new technology and the digital age to compete with incumbents and create opportunities in the sector. With the COVID-19 pandemic accelerating the digital uptake, insurance can now be personalized and tailored to the individual, thanks to innovations such as the built-in model of AI and machine learning. With InsurTech providing much-needed disruption to the traditionally viewed insurance industry, this podcast will explore what new technologies are making InsurTech so exciting. With the help of our guests, we will also determine what innovation and best practice will we see next. With that said, I'm very excited to introduce Robert Korzinek, CEO and founder of Zing, and David Goate, CTO of Marshmallow. Welcome, guys.
Great to be with you.
Thanks very much for having us. Looking forward to the conversation.
Brilliant. Before we dive into the conversation, could I just get an intro about the company from each of you, please? Robert, I'll start with you.
Yeah, sure. So Zing is on a mission to take the hassle out of consumer insurance. We embed at the e-commerce checkout, and our aim is to deliver really relevant cover that easily resonates with the everyday products and activities being purchased and hired by our customers online. We don't simply match those products and activities with off-the-shelf products of traditional insurers. We create our own cover so that it, as I say, it really cuts through to what people care about and want to protect.
Yeah, fantastic. And David?
Sure, yeah. So Marshmallow, we're a UK-based InsurTech, currently providing car insurance in the UK. Our approach has been very much to use technology to bring more affordable prices and better, more bespoke cover to people so that people can make sure the insurance they're getting covers not only their specific needs, but hopefully can also be found at a price which is right for them.
Fantastic. And welcome again, guys. I'm looking forward to this conversation. So I thought I'd kick off with, as we sort of discussed in the intro, the InsurTech industry or the insurance industry has been very stagnant for the last 30 years. It hasn't changed very much. The developments in it have been very slow. But in the last few years, we've really seen a big uptake in innovation and acceleration in technology. So I thought I'd ask, what are some of the latest innovations to hit the InsurTech industry? David, I'll go to you first.
Absolutely, yeah, great question. So I think part of the reason we, myself and the other two co-founders, started Marshmallow was that what we were really observing is, particularly in the insurance space, wind the clock back 4 or 5 years, is that there wasn't really enough focus on customer centricity. I think really that, and I think that's arguably still true today, that there isn't really enough focus on enabling customers to be able to interact with insurers in the way they want to be able to do that. So, for example, not sitting on hold on phone calls for long periods of time, being able to get the level of cover that's right for them at a price point that works for them. I think that's never been more important than today when we look at, the economic climate of rising costs of living and inflation that's putting a lot of pressure on lots of people's household budgets. So I think, ultimately the way that technology is playing a role in that is it can help drive down the cost of that insurance, making it more affordable for people, but also changing the way that people interact with their insurance companies. So changing, for example, to be able to interact a lot more through things like your mobile apps and be able to self-serve a lot of the things you want to be able to do versus having to go on hold on long phone calls, for example.
Yeah, and I think you've touched on a really interesting point there in that the pandemic really did bring about an importance of communication and having that instant ability to talk to people and not have to wait, like you said, for ages on the phone. Rob, what are some of the innovations that you've seen in the industry?
Well, I'd certainly echo that point about customer centricity. I think it's really important for the insurance market to get that, and in many ways to embrace some of the positive developments we see more broadly in the online consumer space. So, at Zing we operate in the embedded insurance market, which we think is a really exciting market. It's taking insurance out of its sort of siloed ecosystem where it seeks to sort of operate in itself, and actually, integrating it with the other businesses that serve our customers, those businesses that are selling or leasing products that insurers are there to protect. So at Zing, we're very much about making those connections into the broader consumer space. It's interesting you make that point about whether insurance has been slow to embrace some of these developments. You look at the broader fintech space, in particular, sort of the buy now, pay later market, BNPL. That there's 11% of the consumer population, 5 million people, have used a BNPL service at the e-commerce checkout in the last year. So it shows that there is an appetite amongst non-insurance consumer-facing businesses to offer additional services at the checkout. It shows that there's appetite from consumers, but insurers have been slow to embrace those connections, and we're seeing more of it now. Zing is a part of that, and we think it's a very welcome development for the industry.
Yeah, and I think you mentioned there that, you both mentioned really, is the InsurTech sector is really sort of following on from the fintech industry as a whole. And one of the key things that we've seen in the fintech industry as of late is a new level of personalization. It's something that has become so important that I think almost if a company isn't offering a high level of personalization, they're going to be losing out on a huge amount of customers. So I wanted to ask you guys, how is the industry now able to personalize and tailor insurance using technology? Rob, I think I'll go to you first on this one.
Yeah, sure. I mean, I think again, it's about fostering those connections with the broader consumer space. Sorry, the risk of keep mentioning Zing as an example, but I feel that we're addressing a lot of these issues. When you know what someone's buying or hiring online, it should be possible to just instantly match a really relevant product that gives that customer peace of mind, that tangibly resonates with that product being purchased or hired and delivers meaningful, relevant cover. It comes down to, I think, a marriage of technology, yes, and then product design. We need to look at product design in tandem with technology to make sure that the cover that insurers sell actually means something real to customers, and it's sufficiently flexible that customers can tailor that, can manage that so that it's something that they want to keep and use. It comes back to just, what does our customer look like? What do they want? And getting straight to trying to deliver just that rather than to crowbar them into a traditional product or product construct.
I think that last point there is incredibly important, that there is no one size fits all, which I think many companies used to try and enforce. David, what are your thoughts?
Yeah, I thought it was a really good point that Rob made there with the marriage or the coupling between product design and technology. More broadly, I think when we think about, I mentioned in one of the previous answers I gave around the importance of customer centricity in all of this. And actually, when we look at the personalization piece of how technology is helping enable the personalization, perhaps a good example for us as Marshmallow is where we made our start is in the space of providing car insurance to migrants who come to the UK. And actually, they're charged on average about 55% more for their insurance compared to UK-born people who'd be a similar risk profile otherwise. Part of that personalisation journey we went on there was doing the work to better understand the different risk factors involved, whereas most insurers are looking at very broad stroke. Well, you didn't pass your test in the UK, we just priced you as X. Our approach was much more personalised and nuanced, so using lots more data points, lots of integrations and various pieces of verification that we could do to try to get a better sense of who somebody is when perhaps they don't have a financial footprint in the country, if they've just arrived here and maybe don't show up on the electoral roll or credit search databases. We've looked at lots of ways to basically overcome those kinds of barriers to basically be able to better and more comprehensively understand a more nuanced and personalised assessment of someone's risk, to basically be able to offer them hopefully a much better price for their insurance. And we were certainly successful in bringing down the cost of insurance for many, many of our customers. I guess just to follow up though on the piece around the marriage between sort of UX research and product design with technology, I think that for me is such an important and crucial part when we look at perhaps why some of the incumbents might have struggled slightly more, or where we look maybe at more traditional or incumbent insurers where perhaps in the past they haven't been hitting the mark with the consumer centricity. I think that there's a fundamental gap, I think, there really with being at the face of understanding what customers' needs are and being able to actually quickly identify and translate that in a really tight feedback loop between your product teams, the people making the decisions and designing the products ultimately that customers will buy. Having that feedback loop there is just so critical, basically, to make sure the right things being recognized, built, and ultimately offered to customers as quickly as possible.
And I think if I can jump in there, I think it's a really interesting point there that I think in many ways that the growth of online in insurance has up to now in some ways been a bit regressive by being able to offer products online through aggregators and through comparison sites and what have you. We've gone down a slight one-size-fits-all approach where the cover is offered generically and pricing is established generically. And sort of to David's point, it just misses some people out. It misses out people that need to get cover but just don't fit that standard box that's been created for a comparison environment. And it misses out some coverage needs that, again, don't fit that comparison market.
Yeah, definitely. And I think that leads on really nicely to my next question. And that is, where is the industry falling behind then? David, I'll go to you on this.
Yes, it's a really interesting question. I think that I broadly probably touch upon some of the same points and maybe add some new things in. I think that where perhaps the industry is falling behind, I don't think they don't have the desire to necessarily become more personalized or to enable new ways for consumers to interact with their insurers. I think that there's perhaps a bit of an issue structurally sometimes for these companies to be able to move at the pace they would like to move, or be able to leverage some of the data that they have in a really good way to actually deliver the best value to customers. So part of that, I think, is like a structural issue for the ways that some of these incumbents might be set up in terms of not having those customer facing teams to conduct the UX research and actually have that tight feedback loop with cross-functional product teams who can end-to-end kind of own the identification of a problem space all the way through to build and delivery of that. I think there's, we see ourselves, for example, very much as a technology company who happens to be operating in the insurance space. We think there's a huge opportunity there. And when we perhaps look at why maybe some of the incumbents might struggle a bit more with adopting some of that technology or introducing the changes they might wish to introduce, is that that fundamental foundation for them to build upon and actually kind of translate what consumers want into an actual product that they can buy, it is inhibited by those kind of communication pathways, and a lot of nuance is lost in that, basically. And I think that on top of that, perhaps when you look at some of the incentives, especially in the past, perhaps that have been there, maybe that's a bit less true today with more consumer savviness between what they actually want from their insurer, perhaps very much kind of popularized by some of the challenger banks in the UK. I think consumers are just more savvy now around what they really want out of their interactions with their insurers and the products they want to buy. So I think expectations have slightly moved on as well. But I suppose in short answer to where maybe some of the incumbents struggling to adopt the technology to be able to drive some of these changes, I would point mostly, I think, towards the structural elements of their teams and how they're set up. They're not necessarily set up with technology as a core part of their business and their DNA, and actually operating in a way that isn't very compatible with how most modern technology companies run does hinder their ability to be able to actually identify the problems and actually act on that really quickly.
So do you think that's something that all companies need to really do then, is become almost this technology first company and then sort of file in the offering following that?
Yeah, it's interesting. I think certainly looking at rather like what are our key competencies and capabilities, or companies that are able to adapt more quickly to changing consumer demands. I think certainly companies that don't adapt in this way are going to struggle, I believe. I do believe that they're going to have a harder time to be able to actually keep pace with the evolving market and consumer needs, and that might eventually lead to them having a harder time actually selling their products and retaining customers. So I do think that fundamentally companies are going to have to look down this route of understanding how they're going to leverage technology at the core of what they do, particularly with insurance being such a data-driven market as well, a data-driven industry. And you look at how you can offer, it's a very price sensitive industry, generally speaking, as well. So when you're looking at how data is being used to enable more affordable products, any company that's not putting themselves on the front foot to leverage their data and their technology as effectively as they can are just going to be losing market share, in my view.
Yeah, I think that's a very, very fair point. Rob, what are your thoughts? How is the industry falling behind?
Well, there's quite a few ways to answer that question. I mean, I'd certainly echo David's point around the establishment of that sort of feedback loop to make insurers more agile. I think there can be a tendency, an understandable tendency in the industry to look at macro trends and to form, product rules or underwriting rules based on those macro trends and forget about the alternative sources of data available that can help us to better meet customer need. I mean, I'll use a very everyday example from a conversation I was having with one of our partners this morning, that they operate in the jewellery and watch trade. And they've had a real problem with insurers saying, we like insuring jewellery because that performs well, but we don't like insuring watches because they perform less well. Well, that might be great in an insurance landscape to just say, well, we'll pick this and not pick that. But it's not great for a customer or for a partner retailer. There's a whole world of data out there amongst retailers of these products that insurers aren't tapping into to create new and better data sets to enable us to meet customer need. Simply saying, these bits are less profitable and we don't want to write them isn't terribly helpful. We need to find out how can we offer a product with sustainable terms and conditions and sustainable pricing that serves that customer need. I guess the other point I'd make, I agree, it is fundamentally a price sensitive industry, and the term of grudge purchase often gets bandied around when we talk about insurance, and in some cases it's true. But I don't think, insurers sometimes shy away from trying to properly promote and market their core product. The classic of giving, cinema tickets as an incentive to buy insurance. Well, in a way, it's great for certain customers, but I think in a way, as insurers, we should be selling our core product. We should be able to promote, does what it says on the tin insurance, and create something that is sufficiently transparent, sufficiently relevant, that people are prepared to pay for it. And indeed, as an embedded insurer, putting it where people are more likely to want to buy it perhaps makes it a less price-sensitive purchase. What we're interested in at Zing is can we sell a product that customers want at a price that's sustainable and represents value, rather than continuously comparing ourselves to another generic product at a certain generic price point that may not fit customer demand so much and may not be generating that sustainable pricing for insurers.
Yeah, and what you just mentioned there that sort of stuck out to me is this sort of lack of transparency. And is that something that really was characteristic of the insurance industry up until recently, or is it still something that's sort of a grey area, do you think?
I think, you've got the classic example there of if you present a customer with a 50-page policy document, how many of them are going to read it? Yeah, it comes back to that point about marrying product design with technology. How can you, let's face it, our customer is going to have a limited attention span for wanting to fully digest their insurance coverage. We have to create a product design that can very readily convey what the product does, what it doesn't do, anything the customer needs to do or not do, and set it out as simply as possible. And yes, use technology to deliver that message in the right way and at the right time and in the right place. But the product construct is pretty key. We shouldn't have this situation where customers are finding out if they're covered for a certain scenario only at the point where they think, can I claim for this? It ought to be clear at the point of product purchase, this is what this product does, and this is the price we're charging for it. That's a simple mantra that we believe in.
Yeah, for sure. And sort of having discussed the problems or how the industry is lacking, technology is obviously going to be a huge way to help improve it, to make things, as you said, to make them clearer, to make sort of product and price match be clear to a customer. So what new technology is needed in InsurTech? Rob, I think I'll go to you first.
Well, I think we've talked a bit about pricing, and I think pricing is a key one, and that doesn't need to be about groundbreaking AI. I've spoken a bit about connections during this. Finding the right connections beyond the insurance industry, yes, using technology to make those connections more efficient, more dynamic, more in real time, but essentially harvesting different data sets to work out who our customer is, what they need, and to properly price it. Taking the household insurance market, one of the key data sets used in evaluating risk is postcode data. I don't think my postcode says a whole lot about me, but what I buy, what brands I buy from, when, and how much, that says a lot about me. And this isn't about a big brother exercise. This is about working out what our customer needs, how we can deliver it, and how we can price it sustainably. So I think in a way we can go too far down that AI route and miss that with readily available technology now, connected into a variety of different data sources, getting the insurance industry more connected with the broader retail space can solve a lot of the problems that insurers face and customers face with insurance.
I think that's really interesting, this idea of that just keep throwing technology at this problem isn't necessarily going to be the be-all, end-all solution, is that there are some core aspects, like as you said, communication, that are still needed. David, what do you think?
Yeah, I think there's some fantastic points made there by Rob. I think that with pricing and data sets, I really agree that there's not necessarily the whole answer isn't just let's just throw some machine learning models at this and just hope for better outcomes of price. I think certainly there's a place for those to play a role in that conversation, and certainly we've found some useful areas to leverage that, along with some pretty unique and bespoke data sets that we're quite happy to have, which help us to better understand that more granular, like personalized risk element to be able to price more effectively and provide more affordable insurance. But I think actually when you look more broadly at what some of the things that might be holding companies back, technically or otherwise, when we look at the product considerations for new technology and InsurTech, I think that there's also a piece around how well integrated you are across the whole stack, basically. So for example, for us, when we look at all the way from distribution of the policy, so perhaps that's someone buying from a comparison website, all the way through to how they interact with us during their policy term. If they do have to make a claim, what happens at point of claim? A lot of times companies are building this in a rather fragmented way. They're having to deal with a lot of legacy systems or outsourced third parties or off-the-shelf softwares, which, with the best will in the world, trying to join all of those things together in a way that actually ends up providing a good customer experience is pretty difficult to do. It might be a lack of availability of data or an inability to connect something up to a live system like an app that someone can use. Part of our strategy and what we've been doing over the last few years is bringing more and more of that completely in-house. So as a point of example, we started out not by buying a policy administration system or buying a pricing matrix to host how all of our factors would align together. We built all of that from scratch in-house. And whilst perhaps some people in the industry might have said that was ill-advised, you're going to really struggle, it would take a long time, and these are complex systems, I guess we had the vision and we wanted to be in full control of not only the data going in and out of those systems, but the flexibility of those systems to be able to provide consumers with the right information at the right times. When we talk about communication, the ability to be able to do that is really important, is linked to kind of fundamentally how those systems integrate together. So another example of this might be that claims, we used to work with certain outsourced partners, and we still work with some, but we've taken much more of that closer to be in-house now, which means that a lot of the data and systems that we have are able to offer things like real-time claim updates to people through our app. And there are examples like that, many more that go on, where we look at the whole technical system that's integrated across the whole kind of customer journey, whether that be renewals, the purchasing of the policy, the way they interact to make changes to their policy, anything really to do with any customer interaction throughout, is now much better integrated than in the past.
I'd certainly agree with that. I think when we talk about silos within the insurance industry, one of the problems is that even within one insurance business, you've got your policy administration system, your claims management system, your pricing, your policy issuance, potentially with completely different tech stacks, quite possibly, probably with different providers as well. Well, just in terms of establishing those connections so those systems can properly talk to each other and you can get the most out of them, that's a problem in and of itself.
Absolutely, yeah. And I think, I don't know how you found this, Rob, but I suppose with those silos of data that you'd be speaking about there, I guess, there's so much potential to unlock from joining up those data sets and understanding people, whether it comes from a personalization aspect or even down to something like potential fraud that might be going on, which is a really bad problem because it's raising the prices for everybody else realistically when fraud's happening. And, not perhaps having joined up data sets there or the ability to actually look at the relationships between those data sets is certainly something that can hold companies back from making better quality decisions.
Yeah, absolutely. I couldn't agree more with that. And it frankly, it makes life simpler. If you build them to speak to each other from the beginning, it does make life simpler in the long run and achieves better outcomes. So yeah, we're in agreement there.
Moving the conversation on to sort of like the challenges the industry is facing currently, sort of discussing what we said earlier about customer centricity and sort of the connections that are made between insurer and customer. I remember an interview I did with a company in the US. They were focusing on sort of local insurance, and the level of care that they were providing for their customers was that it was past the point of just here is the payout that will happen. There was this constant level of communication, and that they were discussing things throughout the process, even past say whatever they bought had gone. They stayed in contact with the insurer, and I think this is something that it isn't only in the InsurTech industry, it's just in the world right now, is this level of communication, concern, and care, probably brought on by the pandemic. But I think one of the biggest challenges the industry is facing right now is this level of care and connection, that it isn't just a bot that's paying things out to you anymore. What do you guys think? Do you think that this is a fair statement, or is there a bigger challenge in the industry right now? David, I'll go to you first on this.
Yeah, I'm really glad to have this question because I'm kind of, it's an area we're pretty passionate about, and I think certainly sort of agree with the sentiment of what you were sharing there in terms of, I think, a trend to want to engage customers more for lots of reasons. We can look at a really small example of the UK obviously recently got a bit of a hammering from Storm Eunice, and what we did before that hit was basically send out communication to all of our customers about the impact that the storm could have on their car, for example, if they're on cover with us for car insurance, and some ways to potentially, if they can safely move the car to somewhere else and mitigate that risk a little bit. Obviously, it's better for customers and for us if the outcome is that their car ultimately doesn't end up getting damaged in a storm, whereas it might otherwise have been. I think examples like that, and you can take that a lot further. More broadly speaking, our mission is we exist to reduce and one day eliminate the distress caused by accidents and disasters, using the most innovative technology to make that a reality. And that's quite a big, broad mission. Is like, ultimately, how can you stop people encountering the peril in the first place, whether that's having a crash or, if you're looking at home insurance, perhaps the flood risk of the property and things like that. But there are lots of ways you can imagine being able to actually ultimately mitigate the impact of some of those risks on people, whether it's being there for them with a better claims process at their moment of need, making that process really straightforward and paying out as quickly as possible where it's appropriate to do so, or whether it is, as I've said there, actually trying to stop a peril kind of having such bad impact on somebody prior to it actually happening. And part of the things we're looking at the moment, actually, I can't share all of the details on this call, but we'll be happy later in the year to talk more about this, is how we're going to help people become hopefully safer drivers and, incentivize them for that kind of behavior.
Yeah, and I think an interesting point there is sort of incentivizing people to to better themselves, and how that can have an ultimate good payout for them. That they end up having to pay a smaller insurance because they simply don't have, they're less risk essentially. Rob, what are your thoughts?
Yeah, I mean, there's lots to cover here. I mean, negative perception is one of the biggest problems that faces the insurance industry, and one of the biggest, certainly in a consumer-facing insurance business, one of the biggest problems we have to address and be mindful of all the time. And again, as with all things, some of this is technology-led, and some of it is process-led. In terms of I guess the more technology side, we touched on fraud mitigation before, but we've talked about joined up systems. From the point at which someone becomes a customer, if we're doing more in a seamless and unobtrusive way to validate that they have what they are purporting to have when they insure it, when they bought it, from whom, that's already taking out a whole load of the inquisition that customers are often faced with at the point of claim. And by joining up your systems, you can have more integrated fraud mitigation through the system, again, so that you're not having to subject all customers to an inquisition. It's targeted to if there's an area of concern, obviously, because fraud mitigation is important for all customers. But the claims process should be a positive part of the insurance buying experience. And I guess that's where I come to where we have to accept that technology doesn't have all the answers. At Zing, we believe strongly that in the process of buying and managing your insurance cover, you generally just don't want to be speaking to someone. You don't want to be picking up the phone or emailing. You want it to just be as seamless, as easy to achieve through technology as possible. But actually at the point of claim is where a lot of people want that human touch. They want some human contact to understand their circumstances and guide them through it. And I guess a final point, and to be slightly repetitious around this theme of connections, is we use online retailers as our distribution, but we also believe that those retailers play an important part in the settlement of the claim. If we know that our customer has made a decision to buy or hire a product from that company, they enjoy the experience of dealing with that company, hopefully. Isn't it an obvious thing to make that retailer part of the claim settlement process and try and turn it from an adversarial claims adjustment process into more of a renewed shopping experience? That's how we're seeking to address that negative perception problem.
Yeah, and I think that's definitely something that should be taken in, not only in the insurance industry, but in all industries, is this idea of sort of clarity and communication, because if everyone is on the same page, then it's the easiest way to get a solution out of what could potentially be a big problem. So yeah, no, I think that's a very, very good point. Moving on to my penultimate question, and it's sort of looking to the future now, because as we sort of mentioned at the start of this podcast, and we sort of alluded to throughout, the insurance industry was very slow to develop, I think is fair to say, for a lot of years, essentially. But now that this technology, as you guys have said, is being so well implemented to help connections, to help customer centricity, to help achieve all these things, what's going to happen next? Where will all this innovation take us? Rob?
There's a lot of different ways to answer that question. I guess a theme that I think insurance will continue down is demonstrating insurance is broader benefits. At the risk of plugging away on this interconnectedness theme, Zing's distribution is embedding with retail e-commerce businesses, because we think that's the best way to deliver relevant cover where people want it. But if we want that as a distribution channel, we also obviously have to demonstrate the benefits that hosting an insurance offer can bring to those brands, to their core business, to achieving their e-commerce KPIs, to improving buyer commitment, to improving post-purchase interaction with their customers. And again, insurers up to now have been all too often a bit siloed and see their interaction with other non-insurance businesses being, the payment of referral fees or profit shares, rather than thinking, well, actually, the process of someone buying insurance, getting protected, going through a claim, can actually be meaningful and interesting parts of a non-insurance business. And I dare say that could be part of the breaking down of some of the stigma that exists around insurance, is showing other customer-centric businesses that insurance can actually play a part in improving their customers' experience of them.
Yeah, I think that is a very important point, that this idea of customer wellness and sort of reassurance that they can be comfortable to then make these transactions with the retailer. David, what are your thoughts?
Yeah, it's a great question. I think when I think a bit about where I think like technology and innovation will take us in the sort of near to mid-term future, I think that given like the broader backdrop of the economic climate having just come out of or still being in the pandemic really, and obviously a lot of the as I spoke about earlier, the rising costs of livings, I think like affordability will continue to be a really important piece to consumers, but an important piece to the puzzle for consumers at the moment in their decisions of what kind of cover they want to buy and from who. I think with that in mind, the technology that I can see being used to continue to develop capabilities in those areas will be anything that helps people get a better sense, or helps companies get a better sense in risk pricing, really, like what the right price is to offer to certain groups of individuals, and that will happen from better quality data sets, broader data sets that other competitors perhaps aren't using, as we've spoken about in this conversation, joining up various disparate data sets to build a better picture of who a customer is comprehensively. So through some of that more personalized approach, I think we will see a continued improvement in general affordability of insurance. But I also wanted to touch here a little bit on like the inclusive nature of the insurance as well, which is like certain areas or segments of the market which feel a bit more kind of excluded from general insurance. I know Rob made this point a bit more broadly earlier around how perhaps some of the broad stroke approaches through some distribution channels perhaps don't work as well for everyone. And, there are certain areas of people who have perhaps suffered like job losses through the pandemic, or perhaps younger people with lower or non-existent credit ratings, for example, who are perhaps kind of actually excluded to a degree from the current sort of main insurance market, whether that's, troubles buying insurance or just getting a good price for their insurance. I think certainly we're using technology to try to actually improve our reach into those areas, better understand those customers through better quality data sets, various models that can help us glean insight from data, and then really actually just be more flexible for those customers when we can offer the insurance at a price that makes sense for those consumers. It's then looking at the flexibility, because I do think that consumer needs have evolved to a degree where people want more flexibility out of the product offerings they have, and that might take lots of different shapes, whether it is their ability to pause the cover when they don't need it, or whether it is just looking at really making sure that the cover is fit for their needs and not giving them more cover beyond what they need that they're paying for. I think there's a lot of factors at play there, but I think certainly in the near-term future, technology will play a huge role in making sure that essentially affordability and flexibility of cover is right for consumers.
Yeah, and I think, as you said, sort of technology, or as we've said in this podcast, is that technology will be able to help. The development of technology, I should say, will definitely help in achieving this, but there has to be sort of this element that it won't be a one-size-fits-all, and that there is still this element of human interaction that needs to take place. So I guess really wrapping up this really, really interesting conversation, I just wanted to get some final thoughts from the both of you, and sort of, anything that we haven't really discussed that you want to mention. Rob, I'll go to you first.
I guess in the one of the things that that the industry will be looking at, or is already looking at, is interconnectedness within the insurance industry itself. When one looks at the banking sector, open source API, open banking is a thing now, and it's delivering customer benefit, it's delivering efficiencies. Insurance is still a long way off from that. and individual insurance businesses are having to tackle that in their own way, whether it be, to David's point around having one's own systems better integrated, developed in-house, speaking to each other. In Zing's business, developing APIs so that we can interact more readily and more efficiently with non-insurance consumer-facing businesses. But there's a whole potential benefit to the industry about agreeing better industry standards to enable us as insurance businesses to talk more with each other, to share data sets, and ultimately to achieve better consumer outcomes from that. I think that's a trend that's going to take quite a few years to come through to fruition, but it's going to be an interesting one for us to watch and hopefully be a part of.
Yeah, for sure. And David, final thoughts?
Yeah, I mean, I would agree and build upon that. I guess what Rob said there in terms of, I think certainly being strongly vertically integrated, being able to actually have those join up data sets and offer customers therefore like a really like world-class experience from a customer centricity point of view, in terms of being able to make sure that all the right information is there for the right decisions to be made, and to personalize those interactions with people are all, in my view, completely critical to like where we're going. But we have obviously touched upon that throughout this conversation. When I think just a bit more broadly, I suppose, about other considerations coming in a slightly broader time frame for us, and I think a bit about where car insurance might be headed, and we look a little bit at not just autonomous cars, obviously that it's a bit, maybe the jury's a little bit out on exactly how far away that is, but certainly more connected vehicles and just the data sets that enables, such as better hardware and sensors and things on cars, and whether that enables OEMs to partner with certain companies or to start building some of their own capabilities around insurance from a basis of having data sets that actually are, relatively speaking, pretty new and that are not actually available to most companies, in terms of actually having lots more than just a simple telematics box in a car might give you. I think just broadly looking down that route of where better hardware, better sensors in vehicles might actually have an impact in the way that risk pricing is understood, is certainly an area that I think is interesting to think about into the broader future.
I think it is definitely a very interesting point in the sense of, as Rob mentioned it earlier as well, and that you've just picked up on there, David, is this sense of partnerships and the sense of connections that are going to be made, and the idea that it really is an idea that, it really creates this idea that in working and collaborating with each other, that is the best way that customers are gonna benefit from both their insurer and having a good customer experience with their retailers as well. Unfortunately, I think we need to wrap up now because of time constraints, but it has been a very, very interesting conversation, and I want to say a big thank you to you both for taking part and delivering such an interesting conversation. So thank you very much.
Thanks.
Great. Thank you.
Thank you for listening to the Fintech Times podcast. We hope you enjoyed the discussion as much as we did. Don't forget to check us out at thefintechtimes.com and subscribe to our monthly publication to keep up to date with all the latest fintech news.